Good morning. This is Mayor Valensky with Driving Markets. Let's kick off. Okay, so we're going to do a couple of things. At the end of the session, I'll give you a couple of directions where to go regarding commodities or indices or shares. Again, that's on opinion only, but that's towards the end of the video. Let's kick off. Right. This week, we've got a lot of inflation numbers out. We've got French inflation, German inflation. You've got retail price inflation in the US. You've got producer price inflation in the US also. You've got the Michigan sentiment report on Friday. You've got a lot of numbers out in China. I just want to focus a little bit on China before we move on to inflation. Right. So China is going through a bit of a rough time. China property sector is in tatters. You've got losses there running at anywhere between 40-50%. Whole blocks are empty. People are walking away from their mortgages. And as far as the Central Bank of China is concerned, they're trying to resuscitate the economy. What they were hoping for is that after the lockdown, when they reopened the economy, that everything would kick off, everything would pick up, and it would be absolutely fine. It didn't work out that way. What happened was it did jump into activity, then it looks like it stalled. So China's progress is stalled. In fact, effectively looks more like it's going into a recession, even though they've got positive GDP growth. And by the way, we're going to have GDP numbers out in the UK, so we'll keep an eye on those. But back to China, even though it's had positive GDP growth, overall growth is stuttering, it's stagnating, it's dropping. So it looks like it's heading for a recession. Not only that, last week it declared a semiconductor chip metal export war with America. That's the last thing you need now, is a trade war between the US and China, because that will impact overall economic activity and then push both economies further down south. There's a question mark whether the US is actually in positive GDP. We'll come to that in a second. But focus on China with a property sector down, commodity prices that have fallen since the beginning of the year by 25% plus. And China is not going to save the Western economies as it did back in 2009, 2010, after the banking crash of that particular year, of that particular period, where China imported all the commodities and went on a massive expansion, built up huge infrastructure, and that saved Western businesses. That's not going to happen today. What's going to happen today is that China is going to need itself refloating. It's going to need itself refinancing. And what the Central Bank of China is looking to do is it's looking to have a major stimulus program to boost the Chinese economy. Remember, China is number 2 in the world. Now, China is also part of the BRICS monetary scheme. It's the Brazil, Russia, India, China, South Africa, and Nigeria, and other countries are joining BRICS. BRICS is going to be an alternative currency that China and Russia are pushing for, because they want to make BRICS the number 1 reserve currency, which would challenge the US dollar. Okay, remember, the US dollar is the number 1 reserve currency, and BRICS is an amalgamation of countries looking to challenge the US dollar's superiority or power globally. And BRICS will be backed by, or BRICS currency will be backed by the dollar. So it'll be by gold, excuse me. The BRICS currency will be backed by gold, and therefore be one of the only gold-backed currencies in the world, giving it true value. And that's how they want to destabilize the dollar, or devalue the dollar, and make it less of a reserve currency, or even replace BRICS as the number 1 reserve currency. So that's China's plan overall. Going on to GDP, we've got GDP in the UK out this week. It's forecasted at dropping around about minus 0.1%. Remember, 2 quarters of negative GDP automatically mean that the economy's gone into a recession, and that's what looks like the UK is heading for an official recession. So the US could be in the recession, but as far as the UK is concerned, 2 quarters of negative growth means it's in a recession. The UK is already feeling the brunt, it's already feeling the pinch as far as small businesses are concerned within the UK. Back in the US, it looks like we're already in recession on the street, but the numbers don't reflect that. On Friday, the non-farm payrolls came in lower than expected. And what that did effectively is, even though that you would say that the employment rate is slowing down, it's still too high to stop the Fed cancelling out any further interest rate rises. Not only that, there's concerns that wage inflation is picking up. So one of my colleagues, Phil, said specifically that where's inflation going to come from? When I'm talking about inflation, I'm mainly talking about wage inflation. As far as headline retail price inflation, with commodity prices falling further, then what you're going to have is probably overall downtrend in inflation numbers. But core inflation seems to be rock solid at 5%. And that is a concern to central banks. Excuse me. Moving overall to the tech sector, Meta now is doing Threads. Threads is effectively a challenge or competition to Elon Musk's now owned Twitter. So you can pass messages on, etc., etc. They've had 70 million joiners as far as Threads is concerned. So it is going to be a Twitter-style messaging service which can automatically log on to via your Instagram account. But because Zuckerberg is very left-leaning and liberal, then probably will be a platform used by the left socialist radical in order to express their opinion, where Elon Musk is more conservative. So Twitter may be a conservative platform, and as far as Threads is concerned, you could end up having that as a progressive radical socialist left-wing platform. Mark Zuckerberg himself has not actually produced, or his company's not produced, anything innovative. All they've done is buy in the products. They bought in WhatsApp, they bought in Instagram, etc. They're not really innovative, where Elon Musk is innovative, and he's a brilliant, absolute brilliant CEO, great director. Moving on to which shares, where the markets are likely to go. Gold is trending down. So 1890 is a big support level in gold. If it breaks below that, then you could see it down at 1850. Meta, I hate to say it, could be a buy, simply because they could get extra revenue from this Threads now coming through. So you could end up having Meta moving up. Tesla also looks very, very strong. Even though the real value is 180 to 200, you could have Tesla moving all the way up to 300. As far as FX is concerned, you've got to look at cable. I've said over and over again, cable, that's pound dollar, is looking very, very strong. Again, I called it up to 128. It's now 128.5. I called it up already a few weeks ago when it was 122, up to 127, moved it up to 128. It's going to go to 130, in my opinion. That's a good one to keep an eye on. So keep an eye on all the inflation numbers this week. Keep an eye on Chinese production, industrial production. You can share, comment, subscribe, anything you need, just send me a message. Hopefully enjoy the channel. Have a good day.